Good afternoon. Today is Wednesday and the first day of a new month. Today, March the 1st. And what the time right now in Singapore is 12:27 in the afternoon. And overnight on Wall Street, we can see that market continues to close on the weaker end, ending a miserable February after a very, very promising start for 2023 in January. So effectively, what we can see is that the January rise has frizzled out as by the end of February, and now that we are into a new month, will the market go up or go down? Okay, but basically, I think the fundamentals are not supporting higher prices because right now the market is fearful for another aggressive round of rate hike this month when the FOMC meets, okay, at mid-month. Okay, so because the data is coming out right after the last FOMC meeting, which was February the 1st, came out to be suggesting that the US economy remained relatively hot and demand has not been destroyed. So that may prompt the Federal Reserve to double up after pulling back the rate hike increase from 0.75 to 0.5 to 0.25 in February. Now they may have to hike it up back to 0.5. So there is about a 30% chance that the Federal Reserve may do that because as far as the market is concerned, they have really priced in a 30% chance that the Federal Reserve may double up what they did last month for the month of February to 0.5 for the Fed fund rates. So that means the market is going to trade to the downside, more likely to be trading to the upside because of the lingering fear. So we can say Dow Jones is basically trading within a very, very wide band right now. Right now we are testing the last December low, which is at 32,573. Okay, so will it break? I think the risk is very, very good because if the market do a three-wave equality move, my target is at 32,200, maybe to as low as 32,000. So between this bracket of prices, this is probably the last hope for the market to hold out. If the market can actually stabilize here, there is still a chance for market to rebound. But if the market fails and accelerate to the downside below 32,000, I think the bearish view will hold precedence. Okay, so do watch out for likely market to come off aggressively in this month leading to April. Okay, over in the S&P 500, the market is not as weak, although the market have a pullback to test the 4,000 levels, but it did break, but did not. It managed to sustain, okay, for a while. At least right now, as far as the S&P 500 is concerned, it has not taken out last week's low, so that is the only consolation. So if the market cannot hold here and basically take out the 3,900 levels, I think possibly the market may actually accelerate to the downside. So again, the risk is to the downside. Do watch out for the potential move. Although based on some symmetrical look, this S&P 500 does not appear even right now to have completed his three-wave rebound because my ideal target was at 4,373 to 4,450. But things may happen. The market doesn't have enough momentum to go higher because both the Dow Jones and the Nasdaq 100 is showing us that possibly the market has already peaked. So as far as the S&P 500 is concerned, it may have to make do with the high at just under 4,200. Okay, so again, the market risk is to the downside. Nasdaq remains relatively well bid. Okay, there's a very good three-way pullback. Market held at the 12,000 level, or more accurately, it's at 11,900 levels. So it looks like the market may actually trade some more to the downside, and this last defense here will be 11,550. If the market continue to accelerate to the downside, again, based on the idea that the market has topped out at 12,881, that remains very, very possible. And if that's the case, the larger trend is basically quite bearish. So we will probably see prices continue to unravel and then go down below last year's low. Okay, so again, the market is priced to go down more than it is priced to go up. This morning, we have some number being released in China. We have the manufacturing PMI, both the manufacturing and non-manufacturing PMI, which is the Purchasing Managers Index, both came in much, much better than expected. So that gave the US Chinese equity market a boost to the upside. Now 3,310. This is the Shanghai Composite Index. We have saw in January the market. This is the high for January. In February there was 1, 2, 3, 4 attempts to actually punch beyond 3,310, and they all failed. So today marks the first day of a new month. could the market actually succeed in punching above 3,310 this round? The odds are very good because right now the market is supported by very good economic data released this morning as far as the PMI is concerned. So that could give the market the impetus to actually trade a lot higher. Immediate target is at 3,372. Okay, so this will be where I think the market may be heading to at the bare minimum. Okay, over in the Hong Kong market, we also saw that the very positive PMI numbers from China has actually given the Hong Kong equity market a boost to the upside. And we can see this move here is very, very strong on a relative basis. And that means that the market has a very good chance that it may have already bottomed out yesterday. The low yesterday was traded at 19,783. So this could give us the confirmation. But again, from where we are right now to take out the 22,700 is a long way off. So it may or may not happen, but by and large, Chinese equity, if nothing else on its own, without other consideration, I think the Chinese equity market is a good value. So there's a lot of people rushing in to participate in the Hong Kong and Chinese equity markets. So we can see the Nikkei 225 is not doing very, very much this morning. Market open on a weak note, but has already recovered back to yesterday's trading range. So it remains to be seen because so far that we have a three-way pullback from a high of 27,821 and it bottoms out at 27,046. This remains a three-wave corrective pattern, and if this is the case, the market may be primed to go higher because if you look from the bottom of 25,661, this is appearing to be a five-way potential structure. All we need is for the market to go beyond 27,821 to complete this five-way structure. And if this is the case, the market top side could come in at 28,190. So this is the high here that we have to watch out for. So there is remaining a little bit of upside potential here. So we have to watch, okay? And over in currency market, we can find that the dollar came back again after one day in which it actually retreated. So yesterday it came rolling back. As far as the euro versus the dollar is concerned, the peak after the dollar pullback on Tuesday, we can see the market traded to a high of 106.45, and now the market is coming back down because the dollar is taking back the reign. Okay, so if this is the case, it could well potentially test the 105.33 again. Okay, but anything can happen here. Over here, we can see that in the 4 hours time frame, there was a minor three-wave rally. And if the market goes below 105.33, it's going to resume its downtrend. Immediate target is 104.80. Okay. Over in the sterling, Sterling also managed to recover back to 121.43 the day before, and then having met resistance from the previous high here at 121.40, the market basically pulled back down. And if the market can take out 119, it's probably on the way to test 118.40, okay, which is the immediate target over here. Over in Aussie, Aussie is interesting because I have told you guys that I was already short when the market took out, basically rebound back into this support and resistance. I took out my short position on Monday after it appears that all the other currencies are retracing. So I took it up. But yesterday, you can see market went back down again, took out a new low at 0.6695 and then rebound. And then at a point when it trade the low, you can see that there is a reversal signal on the 4 hours time frame. That gives rise to the idea that maybe the market has already bottomed out. Although I would have loved to see the market go down to 0.6630, which is my original target, but this time it looks like it may have already fallen short. So getting ready to actually trade to the upside for the Aussie, at least for the near term. Now, of course, this rise in Aussie is also aided by the idea that gold prices has also rebounded yesterday. So that gives Aussie dollars a little bit of a shine going forward. Okay. Over in dollar versus Canadian, the market actually attempt to rally but couldn't overcome the 136.65 high and then come back down. But overall, this is not as bad looking as dollar yen, because on the upside here, it does look like there is still the potential for the market to trade even higher. My target is 137.75 for dollar versus Canadian. Although I currently have no position in dollar CAC, I would love to do it, but yeah, that's all I can say. Okay. And Let's take a look at gold market. Gold market, as I was mentioning earlier on, there was a bit of a rebound. The market traded to a low of $1,804.76 before the market rebound. So this market was actually very tricky. The market actually went low first in search for any remnants of any stock orders accumulating below the most recent low. Failing to find any, the market actually reversed to the upside. So it must have shaken out a lot of those who have actually gone long at the initial stage of a rebound. Okay, so yesterday this move was actually quite devious. The market actually went searching for stock below 1,806 before it do that rebound. So basically, I'm still holding on to my gold position, and most of my gold position are basically underwater because I actually went long too early. Okay, but the one at the bottom is yielding some kind of profit, so it has actually minimized my loss. But by and large, I think the top side is quite limited. The obvious target it will have to overcome is $1,848. If the market can actually take out this level here at 1,847.60, then the market have more potential to go higher. But I am not very optimistic that it can do that, because in timing wise, I think we still have another month or more than a month in which we probably will see lower prices before the big reversal happens. Okay, so for those who are holding on to position they are on the long side, maybe you want to get out at 1,847 thereabout. Okay, I would definitely consider that for myself. Over in silver, the same thing happened. The market actually went lower below $20.58 and then do the rebound after hitting a low of $20.42. Market immediately will have to overcome $21.18 to have any prospect of even challenging the $22. So again, silver is a buy, but right now probably the timing is not right yet. Okay, probably we can get better prices by the end of this month. Okay, or maybe early part of next month. As far as crude oil is concerned, crude oil managed to rally. Of course, we also been receiving reports that U.S. Production level has actually gone down, so that is definitely favoring the upside. So the oil market is looking ready to actually rally. So I can say that there is a potential three-wave pattern here. Equality move here is $82.17, but I think the ideal target will be $84.83. So based on this, because we have a larger degree pull rally here that's in place. Okay, I'm going to show you the daily time frame. This is what I mean. This is a larger degree three-wave if that equality is at $84.83. So if you're already long, maybe you can take some profit, partial profit at $82.17, and leaving the balance for a chance for the market to actually try the $84.83. Okay. Let's see what else is available. We go down to crypto. Crypto, in my mind, I think it's getting ready to rally. Okay, the market now is testing the upper end of this very near-term resistance line, and the fact that equity markets in the States has actually come down, it did not affect crypto prices, in particular Bitcoin and Ethereum. So based on structure, I think the market is getting ready, okay, to actually burst to the upside. If the market can take up 23,900 convincingly, I think it's probably on the way to $26,300. But could be the last move here before the market. If the market goes up to this level, watch out for a pullback back to either $22, 22,800, or even to as low as 21,400 levels. Okay, because this is the last part of that last leg of a fifth wave rally. Okay, similarly in Ethereum, we are seeing similar move here. Okay, the market is looking to be ready to burst up, and if we can clear $1,664 convincingly, it is probably on the way to $1,811. Similarly to Bitcoin, I think this is the last leg of a 5-wave rally, and if in that case, the market may actually be vulnerable to the downside. Once it hit $1,800, wait for prices to come back down here to either $1,560 or $1,460 thereabout. Okay, so that remains the outlook for now. This is all I have for you, and until tomorrow, this is Daniel Ang checking out. Bye-bye.